Welcome into the Bunker Information Center. Today we're going to be talking about the economy, and this is important for you to know to position yourself in the best way possible for what we're going to see moving forward. The reason I do this podcast is to push information out so that people can make their own decisions. None of what I say is financial advice, but everything I say is important for what you need to know is coming, because the mainstream media obviously doesn't want you to know this stuff because they haven't told you, or they just don't know. Okay. So let's give them the benefit of the doubt. Maybe they just don't, maybe they just don't know anything that's going on in the world. Okay. And that's possible. But we are going to see massive food inflation combined with slowing growth and Fed tightening. This is a worst case scenario for the economy. Stocks will suffer and crypto will suffer. Okay. We have fertilizer prices up 500% since April 2020. This is already causing inflation and will continue to cause massive inflation as we move into 2022 and 2023. Because the things that they're planting in the ground now, most of it will be harvested in late summer and fall, which we will then see the results of next winter, next spring. And so farmers are going to have to pass along the costs to consumers. Okay. And the fact that fertilizer is so expensive, most farmers will not be able to plant corn. And corn goes to feed animals. So, this affects animal feed and will also cause animal prices to increase along with other food. In terms of the war that's happening, Russia is one of the world's most significant suppliers of fertilizer and related raw materials to fertilizer as well, such as sulfur. It was the third largest exporter of urea, ammonia, nitrate, and the third largest potash exporter. So all of these things affect animal prices, food prices, and it will come back to, again, the end consumer, which is us, people who might not have protected themselves. It might be in Bitcoin or Ethereum still, and they think that that's going to protect them from food inflation. This is not good for people in crypto. This is not good for people in stocks. This is not good for people in housing. This might be good for people who have energy stocks like oil stocks. It might also be good for people who have precious metals, cash, maybe some consumer staples. Those are some of the sectors that I would be looking at. Obviously, commodities. Commodities is another one that's pretty obvious at this point. So we're at a war, and that will affect prices. That will affect wheat prices. For one, wheat storage is at a 9-year low. Russia and Ukraine combined for 30% of all wheat production in the world. Those ports have now been closed. Okay, so this is a war not only for the people who are in Ukraine and in Russia, it's a war that will affect all of us. Okay, so we have to protect ourselves for what we have. Russia also supplies about 12% of the world's oil. Oil affects every single part of the world economy, as it is used not only to grow food, but to transport and to make other vital products involved in the supply chain. It also provides the public, people like us who drive around every day or need to drive for work. It affects everyone's bottom line spending ability. This is why consumer staples are a good bet right now, because those are products that people need regardless of economic situation, right? So those are like the Colgates of the world. The Procter and Gamble, right? They make all these things that people need, like toothpaste and, soaps and things like that people are always going to need, shampoos, things like that. So I think that this is going to be transitioning, not quite yet, but transitioning into an economy where people are going to buy things that they need, not things that they want. Regardless of economic situation, you need those consumer staples. We will also have the richer class of Americans who will be seeing their total net worth dropping significantly, which could spur less consumer confidence, right? When people see their net worths, they think they can spend more than they have, even though the net worth isn't realized gains. It's just that what the numbers that you're seeing on a screen. And less money, that comes into the economy from these people is also not good. Biden also took us off the ability to be energy independent with the shutting off of the Keystone pipeline that was already built, was ready to run, was ready to go. And then he just shut it all down, shut down jobs. It was terrible. So we actually buy Russian oil every single day. We buy almost I think 600,000 barrels or so of Russian oil every day. So this will also obviously in turn increase the oil price. So we have to just watch out for that. And with the Fed raising rates in response to this inflation that we're going to see, the Fed is going to have to raise rates to satisfy, the politicians who are going to get blamed for this. They're going to blame the Fed, and then the Fed is just going to try to raise rates, but that's just going to crash the economy, and it's not going to affect inflation because we're going to see genuine food shortages and genuine oil demand for war and for, also the economy opening up from COVID finally. So this actually isn't going to be anything. Like I said, that's why it's the worst case scenario. With the Fed raising rates, though, in terms of housing. So this is another thing, housing. This could deter new buyers from stepping in to buy new homes because, they see the rates are too high for them. It might not make sense for them, right, to have a higher mortgage interest rate. This in turn could lead to the values in homes dropping because of less demand, contributing to more, once again, net worth dropping across the country. It will also reduce credit line ability from people looking to borrow money against their home equity and buy other assets. In fact, it may even cause margin calls on people who already have a credit line. So if the value of your house drops, then, because you're leveraging your house. So you have one asset on one side and then the borrow asset on the other. It's the same as any borrow and lending product. If the value of the asset on the collateral comes down, your collateral, which is your house, you're going to have to pay some of the margin that you borrowed against. Okay, so this will actually cause them to sell other assets, people that get margin calls. They're going to sell their crypto immediately. They're going to sell their risk assets, risky stocks. That's why we see this kind of starting to cascade, because people are front running what they already know is going to happen with some of these margin debts that people owe, because interest rates were so low for so long, people could take out debt. So, or even they might even sell their home, right? They might have to sell their home in a panic because they borrowed too much. But then they look down the street and someone else is doing the same thing. And then the person other down the street is doing the same thing, and interest rates are high, so people don't want to buy. And then everyone starts to cascade, trying to get any money they can out of the house that they bought, and because they bought it for the wrong reason, maybe even, right? Maybe they even took margin out on their house and bought another house. A lot of people have done that. Think about that. That's like a cascading liquidation event. So if enough people do this, it will cause a significant correction in the housing market. And that's why I'm going to try to save some money, in gold, silver, platinum, cash, and then use those things to buy a house maybe like a year in the future from now. So let's check back in a year from now and see how that works out. But it'll be interesting because, CPI numbers for the Federal Reserve, they're already rigged, right? Like we know that the old 1971, 1980 inflation numbers would be like 15% right now. And they're only like 8% right now because they rigged the numbers. And so you can look up more about how they change those numbers and make your own decision. But we know the most two important inputs for the consumer are going to be oil and they're going to be food. And those things are pretty much guaranteed to go up with this Russia situation. It's pretty much like almost a purposeful implosion of the United States and of Europe here. As much as we are, pandering to the Ukraine outcry that everyone is all confused about. They think Putin is like just this terrible, tyrant. It's all propaganda. You have to make your own decisions here with what you're seeing, and maybe look deeper into what's going on. Look at what Putin said in the past about Ukraine and about the US coming in with some of their diplomatic people and bureaucrats and all the things that they've done in Ukraine. Maybe start to look into that. I don't know how far I can go on that, but, try to look into that for yourself. I'll leave it at that. But again, when people know that if they buy more food today, then they know that when they buy more food today, it will be cheaper than buying small amounts down the line. So what people are going to end up doing is they're going to end up buying in bulk, right? Because they know that if they buy storable foods that are going to be just as good in a month as they are today, then why wouldn't they get them now if they're going to be cheaper now than they are in the future? With that said, though, I named some of the assets that look good, right now, and we can take a look at one of these assets, and that is gold. Okay, so gold is one that I would recommend in this. Obviously, I'm not a financial advisor. I recommend this to myself, I guess, and people I know, but you make your own decision. But what I see here is a break of a trend line, year-long trend line in terms of this, even longer than a year. And what I see is a break. And in terms of the daily, we have all the bullish crosses. And gold will usually, it won't move until sustained inflation takes place, which is what we are going to see in the next few years. So I believe we're going to see, this is kind of the beginning of gold's run here. This could be like your last nice real chance to get in. And maybe like I'll get into the price, what I think, price wise would be a good entry point here. But gold will usually also mirror the price of oil. Okay, so we have to look at that. And what we have to look at is the fact that oil is what you use to mine gold, right? So gold, they say is it's like taking a piece of the earth, first of all, out of the ground, the most beautiful piece of the earth. Think about that. This is the most beautiful piece of the earth you can possibly find, and you're using energy to get it out of the ground. So really, within that gold piece that you have is energy. That's like what people say about Bitcoin, right? But Bitcoin is mined with electricity. This is mined with oil. And Bitcoin, it takes a lot less to mine in terms of per ounce, per $1,200 of energy, right? You might get like a full Bitcoin or two. And that's just a lot more cash wise than gold. And that's why I think gold is undervalued in comparison to Bitcoin. But we obviously know that gold is a strategic war metal as well. Okay. So we have China and Russia have been stacking gold for years now. Russia also just announced that they're going to start again stacking gold. They've already been stacking gold, but like periodically. They just said they're going to do another purchase of gold tomorrow. I also believe a lot of the citizens of Russia will probably be rushing to gold. And, also China. I mean, citizens right now around the world are rushing to get physical gold and silver. The price that you see on the screen is a paper price. That is what people are trading in the market. Okay. Traders like Keith McCullough of Hedgeye, who has a top end of the range, low end of the range, they're going to sell at the top end of the range. Okay. They're not there. This isn't their physical gold that they're selling. No one's selling physical gold right now. This is all just paper manipulation. This is paper trading. Okay. So it's like levels. When levels are reached, they sell. When levels are reached, they buy. And what we see here is, again, we see bullish crosses that have just happened. Okay, so we've seen all the bullish crosses. As you can see, the 200-day was at the top, and now the 200-day is at the bottom, okay, which is what we want to see. We want to see these in order, okay? And as we can see, the 20-day SMA is sitting at 1858. That's where I think is going to be a good purchase, between 1831 and 1858, somewhere in this range right here. Okay, this tight range, 820 to about 858 is right in the sweet spot for where you might want to buy some physical. And I think we're going to get it, because this chart, it doesn't look good right now. We're going to get this pullback. Okay, we're going to get this. I think we're going to test this. What we want to see is a test of the 20 SMA, just like Bitcoin, right? Bitcoin goes below 20 SMA and then goes above it. We want to see it come back and test it. Then we get nice runs. That's how it works. But you know, maybe this is part of Russia and China's strategy with the new system that they're going to have, right? Because Russia's getting cut off from the SWIFT system. China is there to, you know, catch them and be the first country to accept Russia into their new digital system. And we know China has the reserves in gold, so there could be a little bit more confidence that comes in if China announces that they have more gold than people think, and then they roll out this new system. Theoretically, they would most likely do this after they capture Taiwan. So I do not expect this to happen soon. You know, these people play the long game. Okay, so we need to play the long game. We need to be patient. We need to not be looking at day-to-day moves. This is a year-long bet. Okay, this is not day-to-day. This is not Bitcoin going up 100% in a month. Okay, this is gold. This is a reserve asset of the world. This is a tier 1 asset along with dollars. Okay, it's US dollars and gold. Those are the two best things you can have in times of trouble. Okay, and longer term, I don't even think I'd trust the dollar, because first of all, they printed so much of it. But if Russia and China team up for a new system, and with Iran and maybe some other Middle East countries, and maybe North Korea's added in there, you know, have this force. That to me seems like those people are probably geopolitically a little bit smarter than us at this point. So again, gold is broken bullish on the moving averages. We've seen the bullish crosses. All we want to see now is this retest here. Okay. And we can cover like silver and platinum real quick here as well for you guys, because you know, we're rolling here. So why not, right? You know, it doesn't look great, but at the same time, we did cross all the moving averages. We still haven't seen those bullish crosses. We still have the 200-day above these. It's not something we want to see. I think we bounce around in these ranges real tight. We might get real tight here for like a month or so, and then maybe eventually we can break. I do think gold needs to lead the way. I do think gold's going to pull back, so I would not be surprised at all to see silver pull back to around 23.39. Maybe, yeah, 23.35, something like that. Okay. Let's look at platinum. But understand that silver, it runs last. It's kind of like an altcoin, if you think of it in crypto terms. And so Bitcoin runs first, which is gold, and then you have ETH run, you know, and then you have the alts run, and silver is sort of the alt. So gold will lead, and silver will just lag. It will lag for however long it wants. But at the end of the day, with sustained inflation, you cannot hold silver down like this. And there's no resistance above $30. If we get above $30, we're most likely going to see $50. If we get above 50, no one knows the true price of silver. No one knows. It could be, I think it's $200 at least. Okay, it should be $200 an ounce. That's my target. Anything below that is BS. We look at platinum, it looks really good too. We just had another bullish cross here. We came up above this trend line. We're retesting it right here. I do think this is a good spot to get in on platinum. I probably wouldn't wait on platinum as much as I would on gold. I do think platinum starts to move here. 10% of the world's platinum is created in Russia. Platinum is a strategic war metal. It's used to build things that are used for war. But it also, with silver and platinum, they also move a little bit with the economy. So with the economy going down, that's one thing. But I do think that there will be a rush to metals because of sustained inflation, where people are making that hedge with that. So for me, I'm looking at least a target of 1350 just to start to hit this high here. If we break that, we can see, we've had this high back here. This whole thing, I guess this this topped out at 2100. So to be honest, this looks like 100% gainer to me. We've had a long accumulation. We've had higher lows here, as you can see this trend line, and we tested it enough. We have a W bottom. We have a nice retest, and now I think we just go. Okay, so hopefully you guys got something out of the video today. If you did, please like the video. Please comment the video below to your thoughts. Please subscribe if you haven't. And again, pay attention to what's going on. Be your own central bank, make your own decisions, and let's get it.